segment. But gentlemen, before we start talking about stocks, want to get a perspective on you as far as RCAP is concerned. If you've been tracking this, Samir, any thoughts on RCAP and the way these developments are panning out?
Yes. Well, RCAP has been in talks for selling stake in the AMC business as well as the life insurance business for some time. So I guess this is just finally the deal going through. It would bode well for RCAP as they will be able to get some funds into their primary business, which is the lending operations. So I look at this as a positive. RCAP is trading at relatively reasonable valuations when you look at it. It's just some of the concerns that are there in their book in regard to certain loans which they have given to some of the group companies. I get a feeling maybe a year and a half down the line, once a lot of those issues get resolved, you could see Reliance Capital at higher levels. But like I said, in the short term, this is a good positive. We also wait for the news to come out on the sale of the insurance business, so that would also bode well. So Reliance Capital has some more side on the upside, I think.
As far as discount is concerned, but Samir, this also does talk a lot about the reforms and the sector itself. I mean, clearly with this kind of deal that we've been tracking out here, clearly means there's a huge appetite from a lot of foreign companies to actually look at the local asset management of the mutual fund space, isn't it, Samir?
Yes, you're right about that. You see, what's happened is over the last few months, well, actually you can say the last 6 months, we've seen the assets under management for most of these mutual fund companies move up quite significantly. And if you look at it, in India, still a very small percentage of the population is investing in mutual funds. So the way probably the overseas funds see it is there is a huge growth upside for this over the longer term. So from a longer term point, like you said, foreign funds would look at India. You already have some more coming in. You had Pramerica that set up about a few years ago. You have Mira, which is coming. You have now Nippon increasing their stake in Reliance Capital. You have Franklin, which is increasing its, trying to get further and further into the Indian market. So yes, you're right. There will be a lot of interest. India is still a very under-penetrated market when it comes to the mutual fund space. So if you are able to grow your AUMs over time, the way this works is on a low capital, your returns could grow exponentially, and that could lead to good profitability. That is what is probably driving some of these international companies to look at India from a longer term point of view.
All right, fair enough. So that's as far. You had the Apex Court saying that you still directing the CBI to actually go ahead and investigate the diary case. Just your thoughts when it comes to Hindalco and how does one play this? Samir?
Yeah, sorry, that's for me. Okay. Yeah. So Hindalco, well, the stock has bounced up from its lows recently. But, if you look at the fundamentals on the metal space, aluminium prices continue to remain low. Profitability for the sector is waning, and this additional negative news has played a negative sentiment. If I look at it on valuation basis, Hindalco from a longer term point of view is at attractive valuation. That's trading at close to half-time book, 0.6 time book. But in the near term, there are no triggers for this stock. I get a feeling the stock could probably go back to test its lowers, the low points, and I would not be looking to buy into Hindalco at this point of time.
Okay. Been a little bit slow today, 3.5% lower. What's your reading when it comes to ONGC?
ONGC will be a performer in how oil prices move. Eventually, at the end of the day, there is a direct correlation, is that correct? So the way I look at it is, I'm not expecting crude oil prices to move up anytime over the next, say, 6 months to a year. In view of that, I think the ONGC stock price will remain subdued. Profitability may not see any upside. One slight positive that may have come in for it might have been that the gas that has been taken up by Reliance supposedly from ONGC's oil field. There's some claim, I believe, which will come towards ONGC, so that might be one slight positive. Beyond that, I don't see too many positives in ONGC at the moment. Second thing is, the government at any given point is always looking to raise money. Now, a lot of PSUs have been facing this. Every time the stocks move up, you see governments coming up with an OFS. ONGC has been stranger to that situation. So again, if we see any price move up in ONGC, news will surface regarding OFSs, and the stock will probably again start moving down. So I expect the stock to remain subdued. These small intraday corrections don't mean much, but basically, like I said, there will be a cap on ONGC's upside in the near term.
Fair enough. Yesterday later in the evening. So, what's your outlook on Infineon? In fact, let me ask you TCS as well, both these counters.
So, actually, I'm a little surprised on the way Infosys has reacted post these results.
Okay.
Good results, good top line growth, good revenue, good profit growth, and the management has held on to his guidance. Now, the market looks a little negative that even though they've done well over the first 2 quarters, while they're not up their guidance. I have a slightly different take on that. I think it's good that they haven't done that. It's better to outperform your own guidance than to try to increase your guidance and then fall short. The management of Infosys has been doing a good job turning around the company. Like they mentioned, the growth has come from 6-7% in the previous year. They have upped it to 10 and 12% in the current year. Margins are going to remain firm. Yes, quarter 3 and quarter 4 for the tech sector are usually weak quarters because of lower working days. I don't look at that as a major negative. I think the markets pretty much knew that even before the Q2 numbers came out. So I was a little surprised at the reaction where the stock is corrected as it has. I get a feeling you will see some good accumulation happening in Infosys, and you could probably see the stock moving up. Valuations are not as expensive. I think it's trading at about 17.5 times 6 months forward, and if you add another 10% growth or 12% growth to top line with similar growth and the profitability trading at about 16 times 18 months forward, which is not expensive. Coming back to TCS, which you think the results expected today, TCS is actually disappointed on the results over the last 2 quarters. So it'll be interesting to see what comes out this quarter. If the results come in a little below street expectations, you could expect the stock to move sharply down towards the 2,300, 2,200 levels. However, if it comes in line or even slightly above, I think the stock will remain where it is. There is still some premium that TCS has been getting in valuation versus what Infosys has. So of the two, I think Infosys would probably see some catch up in valuation and probably move up more than TCS in the near term, unless something drastically, I mean TCS was drastically outperform their earnings this quarter. I think TCS will remain relatively muted post results, and Infosys has more upside in the near term.
Alright, so that's as far as the IT back is concerned. Has been trying to stay a little bit of a recovery, at least what we saw last week. Today it's again a little soft by nearly 1.6%. How are you reading Tata Motors?
Yes, Priyank, you're right. The only thing is it's not a little bit of a recovery. I think the 20% rally we've seen over the last probably 7 or 8 trading sessions from 280 low to a high of 365. So what you're probably seeing is some amount of profit booking from some of the people who bought it at the lower level. We could probably see the stock move down a bit in the near term, given that this profit booking could continue. However, when you look at the valuations of Tata Motors compared to some of the other players in the auto space, I think they're relatively attractive. Now, Tata Motors has been correcting a lot because of concerns regarding sales of the Jaguar Land Rover in China, where people believe because of the slowdown in China, the sales being lower, the profitability of the largest market that they cater to could be affected. Now, that does remain a big concern. However, the way I look at it is, I mean, if you break it up a little further, the real sales of the Jaguar Land Rover is pretty much largely Land Rover. Now, Land Rover is probably one of the best SUVs in that market share, and I mean, today it's an absolute premium brand. So now, when the auto space in China were to also recover, Jaguar Land Rover particularly would get its fair share, and we would see sales recover. Secondly, what you have seen recently is there's been a good pickup of sales in the US market as well as in Europe for the Jaguar Land Rover brand. So overall, the way I look at it is a very profitable arm, that is the Jaguar Land Rover, will recover, and that is a big positive, and that could probably see the stock move up to higher levels towards 450, 470 over the year and a half kind of a view. Now, the Indian operations on the other side have also seen some positives and some negatives. The positive is the sale of the heavy commercial vehicles. We've seen a good uptick in that. And the reason for that has been, that the new system is coming in where all trucks have to have the ABS braking, which is going to up the pricing.
Sure.
For these trucks. So, some amount of sales has picked up there. But the light commercial vehicle and the passenger vehicle in the domestic market is seeing some amount of pressure. Net, how I look at it is, profitability for Jaguar Land Rover will come in, which will benefit. The domestic operations will also see some amount of recovery, and we could see the stock at higher levels. So I look at any correction in Tata Motors as a good buying opportunity, and I'm bullish on the company.
Fair. All right. So buy a dip is the strategy as far as Tata Motors.